Welcome back. Tonight we are going deep into high time frame analysis. We're going to talk about hitting big trades and the time it takes to do so. Buckle up. Let's go. Alrighty then, if you are new with us, make sure that you are following us over here on our Facebook. And of course, Instagram is a lot of fun. Make sure you're down here in our Discord channel chat. This is where all of our traders are hanging out. And of course, here on YouTube, make sure you smash that like button and subscribe if you want to see more videos like this one. I'm going to talk to you guys about how a quant trades the higher time frame. Even though most of our trades are going to be in the lower time frames, we're going to explain why. And I'm going to show you guys things about some fractals tonight. That is an overused term. It sounds cool, and I'm going to demystify the fractals and some other topics. Let's go. All right, so let's start out with that fractal term. If you have been hanging around Twitter or any of the other buzzwordy type of people, you'll probably hear this word at some point and be like, ooh, he said fractal. It sounds cool. There is nothing magical about fractals. All this is describing the fact that things that are on a high time frame also happen down on a low time frame. So let's go ahead and read this out here just so that we have the official definition. A curve or geometric figure, each part of which has the same statistical character as the whole. Fractals are useful in modeling structures. Hint, hint, nudge, nudge. What is one of the parts that we need in our trading is going to be a structure. What is a structure? A formation, a wedge, a channel. In our case, most of the time, a harmonic structure because it is a more complex structure. But structures, think about the structure and on what level is what we're going to talk about here on the fractals. But this is why it applies, such as eroded coastlines or snowflakes. Okay, we're going to take it into the trading world here, in which similar patterns recur at progressively smaller time scales and in describing partly random, or chaotic phenomena such as crystal growth, fluid turbulence, and galaxy formation relating to the nature of fractal or fractals. Okay, so there you have the official definition. Now you can sound smart and tell all your friends you know what a fractal is. Let's go into some charts and talk about how we apply that. What does it look like? And how do we time bigger trades or know when a bigger trade might be in play when we are normally looking for those 5 trades in an hour? How can we time it? Let's talk about that. All right, now if you are here for the very first time with us, you're going to be a little bit lost, but we do not use time bars around here. So if you're a person who uses dailies and weeklies and that 4 hour, 1 hour, 15 minute, 5 minute, 3 minute, 1 minute garbage, you might be in the wrong place. You might want to go hang out with somebody else. Or if you want to get smart, hang around here and you'll understand. Right now, what you're looking at, you'll notice that our bars are a bit more concentric and they seem to be approximately the same size. That is for a reason. This is why we can quantitatively do analysis with our system better than somebody using a time-based bar type. We do not use time-based bars here. I have a video out there you might want to go check out called Why Time Charts Are Useless. Go check that one out, hit that up on YouTube, type that one in. You're gonna like that one. But right here, I am looking at a range bar. Now, the smart folks in the room who've been around here for a while already know where to look to determine what kind of bar this is and how big this bar is. That is an 89 range bar. Now, 89 range bar means that from top to bottom that there are gonna be 89 ticks. That is a lot of ticks. I'd be drawing here for a while if I was going to draw out all 89 ticks inside of a single bar. Now, why does that matter? Well, that means that in one single bar right here, like let's just look at that one right there. Let me zoom in big time. All the way in there from top to bottom. If I were to look over in the right hand side of the chart on the scale numbers, there's going to be 89 ticks from the top to the bottom. Now in this case I'm on the NASDAQ, so it's going to be worth $5 per tick on the NASDAQ, and of course in futures these have varying types and sizes. We use the ones that kind of are ballpark-ish close together. $5 a tick, $10 a tick, $12.50 a tick is where most of our trades are going to be taken so that we can use that balance with our account size. Now, on this higher time frame, that means that one single bar is going to be worth 89 ticks. Okay, we've got that. Have I said that enough times? Good. So if I catch a move from down here, and this is a up 2 finger inside of the golden ropes, off of the bottom rope, and offside of a, you'll notice we're turning green right here, into the super bands, and we have an up 2 finger set up for a long position right here inside of this area, and we overbought and turning into the proper location. Yes, we are. You can't see it here because I just realized it's off chart here, but underneath we are pulling up into a good zone here. So this could be a trade opportunity. Now, mind you, if I were to take an entry here at this location, where's my stop? Well, this is an 89 tick stop. Do you really want to have an 89 tick risk? Probably not. For most people, you're not going to want to be taking 89 ticks of risk. But again, maybe you would. Now, what is another tricky problem with the 89 range? Well, first you have the higher risk because taking a trade off of this lower time frame, you've got the risk. You also have time working against you. Why time? Now, mind you, you're like, well, Vinny, I thought you just said that time didn't matter. Well, time does matter. Time does expire. Time does take its toll. But in our case here, we are still waiting bars at a time. So if we were to measure here approximately how many bars, we're going to stack up these bars. We go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11-ish. Let's just round it to the 10 and go. So 10 times 89, that's going to be 890 ticks from top to bottom. So you might think, wow, well, I mean, it's totally worth it to sit there and wait to take that trade. On top of the fact that look at the time of day on this trade here. This is a great time of day because this is at 9:08. Now, I don't think you can see that on your chart right here, but if you'll kind of look at the timings here on the right, it's off chart here. Well, it's behind my screen here. I'll zoom it out here in a moment, but this is 9:08 a.m. when this event occurs, and this bar here probably, you know, kind of ends itself right around 9:20 or so. So we're talking about at the open, pretty good shot opportunity here. So you might think, oh, you know, I might take that. Well, maybe, and it's at the open, so you might have some speed, so maybe it doesn't take too long. And in fact, as I'm looking down here, that starts at about 9:20, and if I'm looking at this location right here, and I'm looking at the timing, this actually ends at around 9:55 a.m. So is this a good trade opportunity? Well, yeah. Is this something we could take intraday and take a play like this? Yes, we could. And what is the other contributing factor to this is it's NASDAQ. NASDAQ tends to move fairly quickly. So in a scenario like this, sure, maybe the 89 range is not necessarily out of play here when you've got an 89 ticks of risk for an 890 tick move. That sounds pretty cool, right? But that is easier said than done. Why? Because this is a high time frame, and again, these are rare opportunities. How long did you have to wait for this opportunity right here? Well, let's think about it. Let's find the next trading opportunity where another setup might have come up. Well, there's one right there. This one looks pretty juicy itself, right back down into the south area. And this is at 10:52 a.m. So this is maybe an hour, 2 hours apart. So it's not too long, but is it outside of my personal scope? Yes, right? Why? Because again, for my normal standard operating procedures, when I'm going to be running my 5 trades in our system, again, if you are new with us, you're a little bit lost, so you want to make sure you go back and watch our training videos on our website, go through the first 30 videos there, and you'll be all caught up. But we're going to be trading on our 5 trades, and I want to get those within an hour to 90 minutes. So if I'm trading this session, I'm probably already done at this point. I'm probably not going to see this trade over here. But this is my point in talking about the highest time frame. And don't worry, we'll get into the fractals and come into the lower time frames and understand. But I want to talk about this on the highest time frame first, to understand how much time is involved trying to trade off of the high time frame, because I don't want too many people focusing on this, and I'm going to talk about it in the time frame of the amount of time that you have to sit at your desk here. Because at the end of the day, as far as I'm concerned, the way that I teach and the way that I approach the markets is I want to spend the least amount of time and make the most amount of money, which is interesting. It's not just a trading concept. Everybody in the whole world is trying to exchange their time for money, and they want to make the most amount of money with the amount of time that they are putting into work. Most people are working a 9-to-5 job, maybe 8 to 9 hours a day, and then they're trying to maximize that by, well, how much money are you making that day? And that is determined by your hourly rate, right? So we also want a higher hourly rate with our system. So what we're trying to do is maximize what we can do in the markets when, again, we can't determine what the market's going to give us. On this particular day, this gave us candy. Is this a normal style day? Is this normal? Is this going to be where the market's always going to give this to you every single day? No. In fact, that's why I'm talking about this example right now, because this is actually pretty rare for us to have 2 amazing opportunities even within 2 hours of each other on this super high time frame. Normally, you're having to wait a very, very long time for trade opportunities like these to show up. But on this particular day, they just happen to happen. Now, what might be the case? Why might that be? Right now, today is August the 1st. What might be in play that might be causing this? Oh, let's think about this. What's our time of the year? Remember our calendars, right? If you guys have your calendars, get your Econo Day calendar. If you don't have one, you can go over into our Discord room, and there's a link on the left-hand side to go and, you know, buy one of these. This is a physical copy, and this is not promoted by us. We don't sell this or anything, but this is by Econo Day, and this has the months and the years at a glance of all of the major events, FOMC news events, etc., and also showing you earnings season. What is going on right now is earnings season. We just had some of the biggest names in the business, the big FANG stocks reporting this week. We've got other big ones coming up next week, so be watching for that. That means we've got that extra volatility in the markets, because remember, as we're trading futures contracts as the NASDAQ, what is the major components of the NASDAQ? These are the major technology stocks. So NASDAQ is on the move. You got me? So can we anticipate when this might occur? Yes, and this is what we talk about in our room. Why we say we watch the earnings report. That's one of our commands in our room. If you want to see when the earnings are and how many people are reporting each day in our room, you go into the Discord room and type !earnings. That is a really cool feature. Make sure you write this one down. Okay, !earnings, type that in the room. That's going to pop you out a screen grab of a website where you will see how many of those companies are going to be reporting that day. And of course, you can drill down farther to see which ones. But what majorly matters to us is how many are reporting. Oftentimes on Thursdays is going to be some of the biggest days. They're going to usually have the most amount of reports that day. However, Tuesdays are also busy, and Wednesday there. But watch out for those Thursdays. Oftentimes give us the best opportunities. And right here, we also have another thing. What else do we have? Because it's earnings season. And what else? Because I gave the date. What's today? The beginning of the month. This is the first day of a month. This means you are going to have 401k money pouring in that must be allocated. These are some of the things that with the markets that on the 1st and the 15th, this is when people get their paychecks, and they have those 401ks automatically set up to draft, and these are forced trades that must come in. So, and most of the time in the stocks, they have to buy. They can't short in 401k money, so oftentimes that push is going to be to the northward direction, which is what you see here right off the bat in the morning. So this may be 401k money pushing in. Again, we can't validate that to say that particularly, but I tell you guys some of the things on a macro level that you want to keep in mind as you are trading. To know, as a trader, you need to know these things, in my opinion. Now, is it gonna change your P&L from 0 to hero? Maybe, maybe not. It doesn't really matter, particularly with our system. And I'm going to show you that here in a few moments, where it really doesn't matter with our system. That's the beautiful thing about it. Even though I'm teaching you this, and yes, we know about it, I can show it to you. However, do we need it? Not necessarily, because I'm going to show you with those fractals that we talked about before, how I can go down to the lower time frame, use less risk, but I can also keep in mind what's happening here on the higher time frame, which is why I'm talking about this to begin with. Now, again, remember, from this start to this start is about 2.5, it looks like almost 3 hours from beginning to end, where this play comes and this play comes. So how many people, just in general, if you didn't know how big this play was, do you want to wait around 3 hours between plays? The answer for you should be no if you are an intraday trader. Now, again, if you want to be a swinger and, the people that are, gamblers and whatnot, yeah, it's a different story. But we are here to pick up bags. We are traders. We are here to exchange. We are here to do business, and we want to buy and sell things. We want to sell widgets, all right? And our widgets happen to be contracts with where we're playing. So I don't want to wait it was 3 hours. I would like to get more trades and have more opportunities in and out of here, where I can do that at a fractal level. I'm going to use a fancy word here for ourselves, and I'm going to drill in and show you what that looks like. But just keep in mind, so the move up here was about 890, down the other direction also looks like another 890 plus tick drop to the short side. And you'll also notice, as I've told you guys before, markets drop faster than they go up, right? You notice how there's a lot more wiggle to get up, to get down. We are getting down pretty quick, which is why, again, I do like the short side. Some people have said before, oh, how are you making money on the short side? Well, the short side is quicker. And again, I am a quick, fast-paced player. It is just how I like to trade in general. So as things take a move, I'm looking for that opposite move. Although again, I will trade to the long side. However, can you make money to the short side even in the market, in a bull market? Yes, absolutely. So keep that in mind. Okay, so let me show you guys one of the most recent setups. So now we have a triangle. What is that? That is massive divergence firing into the bands again. And we have ourselves a 2-finger, another setup that can give us an opportunity to go here. So high time frame, again, maybe not necessarily as big a move as these were before, but remember, even one of these bars is worth 89 ticks. Let's say that you got, I don't know, half of that bar. Are you happy with, I don't know, even less than half? You happy with 40 ticks? You should be. Would you be happy with 20 ticks of that? You should be, 20, 25. My point with that is when you find a setup coming in off of the high time frame, you can have the potential for your bigger plays. And this is why we look at the higher time frame to start off in the morning. I'm going to look at that high time frame. However, I also want to point out that, like, let's say that you are you're coming in and you're an 11 o'clock player. Okay, let's say that you're coming in at 11:30. Okay, and you're coming in right here at the market to trade the middle of the afternoon. Is there a setup right here on the 89? No. So, you know, how long do you have to wait? Well, there may not be a setup all the rest of the day. In fact, all the way through till the very, very end of the day, there was not a setup on the 89, which is why, again, I'm not really going to be a player off of this high time frame. But let's say that I happen to come in right here at 1040, 1050-ish, right? Is that a cool setup? Yes. Well, then awesome. I may have a big play here set up for myself that day. So even while I'm taking my lower time frame plays, I may have the bigger time frame coming in. And yes, I may be able to participate in this big move, even though I am riding down at a lower level. Let's get into those fractals and show you what happens in between. Let's go. All right, so here I've switched to one of my old favorites as a 34 range chart. So that means each bar is how many ticks? 34 ticks. So 34 ticks inside of one of these. Now, do the same plays show up? Yes. Are they going to be the same size? No. But if you did not know that this was an 89, if I had covered this up, you didn't know the other one was an 89, didn't know this one was a 34, these bars look identical. That is the point and the beauty of our fractal time frames, where we're playing multiple time frames. We don't have to care. With our system, all we want to know is there a setup and what bar level is it on, because we're trying to pick out a few bars. We don't have to catch the whole move, but we want some of it. So can I risk 34 ticks? Well, you know what? That might be something that I might be able to do. 34 ticks, can I do that? Sure. But again, is that really still farther out than my normal trade? Yes. What's my normal? Going to be 25, right? I'm more comfortable with a 25. So even on a 34, even though I've got this nice play up here that I can play off of the same 2-finger salute into the bands, is this something that I would want to risk here for the whole play? No, again, not really right here. So let's go into maybe a 24 range, and let's talk about why a 24 range might be a trade that I might want to take a play off of because of my risk, right? I already told you before that I don't mind a 25 tick stop. So here's one for myself right here. I've got a 2-finger salute set up off the high time frame. Stop can go back behind it, entry down here, which means since I know that one of these bars is approximately 24 ticks, that means my estimated risk here, if I'm entering, depending on how close I get to it, is going to be approximately 24 to 25 ticks. So on the 24 range, this is again one of my types of favorites to have for one of my mid ranges, is for myself to be able to see these opportunities on a 25. And if I get multiple bars out of that, each bar is going to be 25 ticks. So I got 1, 2, 3, 4, I got 5 bars. 5 times 25 there, I'm looking at approximately 125 ticks if I'm catching these off of this time frame. I still want to get into a lower time frame. We'll walk into that here on our fractals, but I want you to understand, like, this is the exact same chart, just moving through fractal values, and you'll see the same patterns, the same setups on high time frames as low. Now, I know, again, this may be very basic for some people, but some people really need to hear this and see it, because some people come to our program and they're just, swinging away at our trade setups and maybe really don't know the power of what's going on internally with our system. So we want to showcase some of this here this evening and talking about the higher time frames, because especially right now, we are going to have higher time frame opportunities. We've got the macroeconomic events going on. We've got inflation hitting. We've got panic in the markets. We've got right now earnings season, and we've got the beginning of a month, and we're coming into the final quarters of the year after the summertime. This is going to be an amazing time to trade, particularly around September to October of this year. This is really going to be a great opportunity for those of us, particularly with AlgoBox, AlgoBox. Again, I don't know about other traders, but the volatility is going to be there. Oftentimes, some of the best opportunities there come into the end of the year. So I want you guys to be prepared for that and know how the system works under the hood with our multi-level fractals. Again, an overused term, but some people are like, well, I don't ever hear Vinny talk about fractals and all sort of kind of stuff. So I guess it's, again, the system already has it all built in for you, but sometimes some people want to know about it. So here, the topic I want to go ahead and cover, because I had a couple people asking the question on it. So let's go ahead and get even farther. So we're on a 24 range. Let's go even farther down the rabbit hole of our fractals. Let's go. All right, so now I've put us on the 18 range. So of course, how many ticks each bar? 18, right? Now, what's going on with the 18? The 18 area is approximately where our MACV levels start. Again, we have multiple time frames. We have our highest time frame that we call the tide. We have the wave, right? And then we go into the next category of charts, which we have is our MACV. And the MACV is where we're really going to start to get what, right before we are taking trades, we are getting this as our primary filter. Yes, I'd love to have some opportunities here. These are where those big opportunities come in. But if I'm coming in during the day, do I have to have a play off of these high time frames to take a trade? No. Where I really want to start filtering is right here. Now, again, I kind of call it getting lucky if you're coming into the day and a high time frame tide shows up. Like I said, that one that was 9 a.m. Again, maybe you're a 9 a.m. player. It's still actually more usually before I'm starting to trade. I like to trade the afternoon myself. But if you were up at 9 a.m. and you had that perfect 89 play that I showed you at the very beginning, man, you have this amazing opportunity. You're just, wow, today might be the day where you have a huge day, right? Instead of your normal maybe 1K to 4K day, maybe this is your 10, 20, 50K. Hopefully one day for yourself, you get a six-figure trade. I still haven't had a six-figure day yet, but I want to. It's on my bucket list to have that six-figure day trade. But I know that I can't make it happen. A lot of people are like, Vinny, how come you haven't done it? It's acting like I'm the one dictating what the market gives me, or trying to go in there and be like, well, Vinny, you didn't take it. Like, you don't take from the market. You get what the market hands out. If the market gives you the opportunity, you're sitting down at your desk, when the trade opportunity comes, then we are taking that trade. That's what we do as quants. We are sitting there waiting till the market gives us the opportunity, our edge is in play, and we execute on those plays. And the market can give us a big play, can give me a small play. We don't really care, but we need to know what it is and give our best guess at what it's going to be. So off of the MACV, I'm here around the 89 range. Now, we have gotten away from using the 89 ranges, I'm sorry, the 18 ranges and the 13 ranges, because it ranges between 13 and 18, typically on the MACV, because we have found that we can get more details off of the algo bars. So now you'll notice there's been a shift over the last year and a half or so of moving into the algo bars, which give us, though, I want to make sure you understand that it is still approximately in this zone of size, the fractal size of the market, where we are trying to go, look, I don't want anything smaller necessarily than this. I want a trend that is at least this starting size. I hope everybody understands that. The size of an 18 range trend is going to be different than an 89 range trend. This should be pretty basic stuff for you at this point, but you understand as we go down, right? But how far down do I want to go? You don't want to get to a granularity so small that you're stuck with these little tiny scalping trades. We don't want that, right? We still want to pick ourselves for our trading system. I still like 10 and 15 minimum ticks out of my trades. Now, there's an exception on the ES. I might be good with 6 or 8 on the minimum, on the lowest side on an ES trade or bonds. Again, I don't trade the bonds. It's too slow. However, if I were to be in those trades, those would be, you'd have to mitigate that by, you know, they're so slow that you're like, okay, I got to take something, and you're going to be getting those. You're going to get paid though, because those are worth more money, right? ES is going to be paying you $12.50 per tick, whereas NASDAQ is only paying you $5, and the bonds are going to pay anywhere from $32.50 up to $50 per tick. On those higher time frames. Of course, you got the FDAX also at 32.50, but we really try not to trade those because it throws off the numbers when we're normally trading with 5, 10, 12, 50 each. It really starts to mess things up, which is why I dissuade you guys from doing that. Again, you can do it if you want to, but again, if you're trying to get my advice to you as your mentor, I recommend you staying away from those higher paid tick values, even though the FDAX particularly is very, very enticing. But if you're going to trade FDAX, please, this is advice for the FDAX players, then play only the FDAX. Like, stick to the FDAX and make it everything, because you are going to get paid $32.50 per tick on that. But don't try to balance it out with these $5 markets, $10 markets. You're really going to have to, you're really going to it's going to be hard for you. So stick with FDAX. If you're going to be FDAX, then play only FDAX. That's my advice for those of you guys playing on that. Okay, so as we go into this level, we're now at the MACV final filter level before we get into the entry levels where our risk is the smallest. However, I want to take into account the plays that are coming in on this time frame. Now, what you'll notice is I've got more lines coming in. What are these lines showing us? In between each one of these lines, you know, they look like they're pretty crowded in some of these spaces where, again, am I really interested in taking a lot of trades necessarily in here with all the, you know, the noise? No, but doesn't it look nice and juicy here? Look at this gap in space right here. You see the juiciness of this? So if we get a play here to the long side with the MACV going green, and I get a play set up, look at the distance I've got all the way up to 12,943.50 here on the right. You see that? And our system is automatically drawing this for us, and these are not just standard pivots. These are areas where we've got volume imbalance occurring, and we've got algorithmic activity at these locations at a level where we are interested, okay? Where we know, we have guaranteed that we've got that activity at these locations, which is why these are very, very powerful if you've got these turned on. These are the horizontals coming from our Flowmaster system, so make sure you've got those turned on. I won't go into a whole lot of details on those here, but this is a great example of a spot where we're coming off of a super band. We are inside of two pinks, and the next blue is way up here at 12,943.50. So if I get a trade opportunity in here to the long side, I know that I may have a really cool opportunity to run this all the way back into the golden ropes, and target one being that 12, well, maybe not necessarily target one, but a runner target one is going to be up there at 12,943.50. Very cool opportunities that we can see even off of the MACV opportunity, off the MACV levels. And now let's get into the algo bar entry chart levels, and let's go. All right, so here's our normal setup. We've got the 89 that we talked about here. We're filtering through, looking for trade opportunities here. Although again, very rare that I'm going to come in at, you know, my time of day. I would love to be like, oh, cool, if I could just go back to, this happened at, looks like 3:15, 15:15 there. So 3:15 in the afternoon. Sure, if I was at my desk at 3:15, this would be a great play. And this, again, for me in the afternoon, this would be my play of the day, to be looking for those shorts off of the highs. I'll be looking for shorts the entire end of the day when this play comes in here, if I'm looking at the 89 on the high time frame. So now I want to drill down, and I've got this, let me zoom this in here, right? I've got this nice play set up coming in here off of the high time frame all the way down. These would have been yellow targets down here. We've got target one, we've got target two. Again, if you are not familiar with our system, you don't know that these would have already been showing up ahead of time, not showing in green or fully laid out, but the targets for those would have already been there, and you've got higher time frame entries coming. Now on the mid MACV here, this is where, again, where I'm going to get my filtering from, right? I want to follow inside of these bigger zones. I want to find that spot where I've got that short that goes along with the high time frame, and then I want to take my entries. Where do I have entry opportunities? One of the things I want to tell you guys, if you are looking for a high time frame opportunity, is simply find the most recent triangle off the MACV. Taking notes tonight. Easiest way to pick bigger plays. Find the triangle off of a higher time frame that has already started to move. Now you can't just take one that's like, okay, that hasn't begun to move. So in this case, like not right now, but if I were talking about that 3 o'clock time frame, this is going to be a eyeball catcher right there. I've got a big purple, I've got a purple triangle right here. You know, massive divergence, higher time frame. I've got a red dot here. This is my opportunity to basically, for the rest of this time, I want to try to find my shorts all the way down in it. I get a second one, shorts all the way down through it. Now, this one's going to show up and give you some trouble because it's like, oh, we got another one. This might be the place where you start to think, okay, I need to hold off here and maybe start to think about something else. But find a spot. Again, it's not going to be 100%, but one of my favorite things to do now with our system is just find the most recent triangle that goes along with my higher time frame narrative that I've already picked out because I've seen the higher time frame showing me a setup here, and I want something that matches it here. And now I'm entering in on the lowest time frame algo bars. Remember, we've got two levels here. This one is going to give me some bigger plays. This one is going to be some smaller plays. This is where we're picking up those 10 and 15 bags. And of course, we already know that. I don't need to go into a whole lot of detail on this with you guys, but I want you to understand how those fractals work from high time frame down to lowest time frame. But then I want to point out this. if you get a play set up that's coming in off of the lower time frame, and some of those things that I tell you guys, some of your bigger plays are going to come off of the king timings, right? When you've got a king timing line, here's a king timing line, here's a perfect crossover right here. This is a PRZ cross entry. You can see the power of this play right here. Can you not? Let's zoom in. Do you see the power of this play? There are two verticals here. There is a large, that's the blue, and you've got the pink, which is the king. The LK timing line, boom, plus you've got the multi-cipher, looks like a cipher and a butterfly. Maybe not a cipher, hold on. This is a, I'm sorry, butterfly. So you've got the butterfly PRZ with the cross. This is a PRZ cross entry play, easy peasy. What's our stop right there? How many ticks is that? So you're looking about risking, this is on the threes, so you're looking at risking maybe 15 ticks to the top of this. And what's your drop, right? Huge drop offs. You're getting target 1, target 2. You're going to hold for runners. Remember, you're trying to exit when you catch a green that holds. This green doesn't count. It pops through. So you continue to hold the position even all the way through this. Finally, first setup that drops is right here on the green dot for the final hold. Now, if you're crazy ballsy, you re-enter right here on it. What's that? It is an HMD. Right, HMD to the short side, exiting on the shark. The shark breaks through. You add to your position. You hold through until the blue dot. Right, you understand this? Again, you're still getting target 1, target 2s. I don't want to play that. You guys already know the drill. You're hitting T1, hitting T2 along the way. But with your runners, how are you playing that? How are you going to know that you've got the opportunity to make these bigger runners? When are you going to go ahead and add a runner? When are you going to have the runners available? Because you have to make that decision. What I'm trying to tell you is that on your fractals, this is where if you have the higher time frame with you, this is when you want to have runners. If you do not, then you don't. See how simple this is? I always try to simplify things. We don't want to make them complicated. So if you do not have a higher time frame play to work with, then we're not playing runners. And I'm fine with T1 and T2. Everybody understand that? Target 1, target 2. This is where we live, right? We live on T1, T2. This is what we bank on, right? However, on those days where you've got earnings season, you've got beginning of the month, you may have more opportunities coming in here off of the higher time frame. And when it does, make it pay you. Go for the bigger plays on those days. And on the days that it's not there, hello, hint, hint, nudge, nudge, then don't. Play easier, play softer. Final note. Speedometer. I just did a whole video on the speedometer. Make sure you understand how to use that speedometer. Remember, you don't have to have it expanded out. You just need to know what the number is. What is the number running at? Remember that if you don't have a number picked, again, I love 45. Okay, 45 is a perfect scenario, although I might go a little bit lower. Okay, I might say 40 up to around 75 BPM is going to tell you when you've got, guess what? Higher time frames coming into play. Full stop. Think about what I just said. Higher time frames tend to be coming into play when these start to move at this speed at the lower time frame. Does everybody understand that? When things are at a standstill, that means that the higher time frame is really just mamby-pammying around. It's just exploring for price. But when these get to the move, when they are on the move, which is why our system is so awesome, because it's just going to tell it to you. It's going to give you the number. It's going to be like, boom, 45, let's go. Okay. You don't have to know if the higher time frame is in play because the time's already, it's going to tell you right there on the BPM. So guess what you can look at? When that high time frame is kicking in, and this is sitting here at 45 BPM right here, put your eyeballs up here and go, what was the most recent play? Oh, it was a short. Awesome. Get short and take the bank. You understand? Get paid. Play it. Play it hard. Push it when you've got it. And when this is sitting here playing around, it's like at 15, 20. Sometimes it gets so low, it gets down in the single digits. Why even play? Don't even play. Just not even worth it. Just walk away. Go do other things with your life, okay? Come to our system. Our system is awesome because it's going to tell you what you need to know all the time. You don't have to know all these things. I am giving you the deep dive tonight. I'm getting into the hardcore nitty-gritty things, but I want you to know it only because when I've talked about the speedometer recently, I want you to know where it comes from. I want you to understand how it works internally, why it's so powerful. It's not just it's just a thing. It's made it up. This comes into play because we understand the fundamentals. We understand what moves the markets. We understand how to detect when the markets are moving. We know when the algorithms, not ours, but when their algorithms are kicking, our AlgoBox gets to kick in, and you get to take advantage with the edge called AlgoBox. Hope you guys enjoyed that. I'm going to catch you guys tomorrow. See ya.